Hi guys, Phil Rogers and Lauren Hall here from Loan Market Edge. So just coming to you with another massive week. Obviously Superhero Friday again. Probably feels a little bit more like Superhero Month at the moment, but we're all getting there, which is great. So it's showing the support around what we're doing and keeping the team excited about what's happening. So a couple of things we just wanted to reach out and talk to you about today. Obviously to wrap up, look, it's been a short week, a short couple of weeks on either side. There's been a lot happening and there's probably a couple of areas we thought were really relevant. So one in particular was around what's happening in the banking world at the moment. So I'll talk a little bit about that. Certainly some changes to policies a number of the banks are bringing out fairly swiftly. And we've got some details around the movement in the rental market, and investors and landlords. It's definitely a hot topic for anyone that owns a property at the moment or potentially rents one as well. There's been a lot of dialogue and a lot of talk in the news about that at the moment. And another one was just to talk a little bit about maybe the wins for the week and some of the stuff we've been able to do for our clients and what that looks like at the moment. So when I talk about the changes to policies, I've taken a couple of notes down here around some of the things we're seeing, and especially at the moment, very much income and industry specific. But we've seen for PAYG, for example, we've seen changes to the requirements around the types of income, the length that's been in play. We talk about overtime, we talk about allowance, we talk about casual. They're reaching out, they're touching base with employers, they're asking for updated pay slips. Some common sense stuff we would think, but definitely when a lender goes from using 80 to 100% of overtime and allowances and now might only use 50 or 60%, that shading is a huge flow-on effect to what a client's potential borrowing capacity could be. Likewise with self-employed. We've seen requirements around, traditionally we would work historically back 1 or 2 years. We're now they're looking for a lot more up-to-date figures for self-employed clients. So that might include up-to-date BAS, it might include updated P&Ls, it might include letter or verification on trading accounts or from the accountant, all of which are definitely slowing up the process a little bit with the banks at the moment. Probably one of the biggest issues that may create for clients is it's not the now, it's potentially if you've had a pre-approval that's anywhere older than 2 weeks in the current market, there's every chance that may no longer be valid. So lots of encouragement to reach back out. We're touching base with all of our applications in flight at the moment to reconfirm a number of things around that, around changes to their circumstances and their ability to make repayments and where things are at with their employer. So really getting on the front foot to make sure that that's not going to be something that comes up at the 11th hour once you've signed a contract. There was a couple of case studies, a couple of wins, I guess we wanted to talk about. You had one, Lauren, you wanted to touch base on?
I did, thank you. So I met with some lovely clients this week, virtually of course, and they'd had a change to their circumstances and they needed to move to a new property quite quickly. They'd managed to source a deposit, but because of the nature of where that deposit had come from, so it had come from family, we weren't able to satisfy what's called a genuine savings requirement, and that's a really important part of the finance application. So we did a fair bit of research as a team and managed to find a really niche policy for these guys that would allow us to be able to move really quickly and get them into a new property. So what was even more favourable is when we actually looked at what the cost of this new property was and their new mortgage repayments, we compared it to their current rental commitment, which was $575 a week, moving to a new mortgage repayment at an interest rate of about 2.3%, which was going to be about $400 a week. So not only do they now have stability and a time for their family to be able to move to their own home and what's a bit of an unstable time, but it also means that now we can put some money and some cash flow back in their pocket as well. So saving the $175 a week, and they get their own home, which was awesome.
Yeah, wow, okay. Look, another area that's incredibly relevant, a little bit of a hot topic at the moment, is around the rental market, is around either a landlord or a tenant and what that looks like. And obviously we won't go too far into maybe some of the projected requirements that are going to come into play or some of the government style things, but just what we're seeing from the lending side, in particular, the large number of properties we've seen. If we talk about the Gold Coast market, and no doubt it's not a silo compared to some others, and there's a lot of that's happening, but the amount of holiday rentals and Airbnb, etc., that are starting to flood the market. Was chatting to the team here at Ray White Service Paradise and their property management, and they'd seen from 1,200 in the from 2 weeks ago, we'd seen 1,200 rentals go up to 3,500 rentals now available here on the Gold Coast. So it's a big flood. It's a huge influx onto the market, and I guess that presents a couple of challenges in there. One is an ability to try and get those rented. One, what that's going to or two, what that's going to do to potentially to some of those rental prices as well. Noting that with the landlords, we're seeing requests for rent reductions starting to come into play because of potential change to circumstances. And we're also seeing some of those landlords needing to take potentially a lower rent than what was expected to be able to get theirs, ahead of the pack or to stand out in a market like that. So really sort of unique. And I guess this next week or so, it's what's happening here in Queensland in particular with the state government and some of those proposed changes to the requirements. It's going to be a really interesting week, and we're keeping a close eye on that. But one of the other areas that we've been able to assist during that, over these last couple of weeks, and noting that this is coming, we've been working through Loan Market and our team running a Love Your Landlord campaign. And a big part of that has been just really getting in touch and helping landlords understand their position, not only now with their current bank, but what that's going to look like going forward and what options are available to them. We know that one of the most expensive parts of or costs associated with owning an investment property is actually the mortgage. And at the moment in the current market, trying to get an increase in rent of $50, $80, $100, it's going to be quite challenging. But what we've been able to do is maybe offset that when it comes to negotiating on what that looks like on a rental amount with working with them on the mortgage. So one of the wins we had this week, which is a great client we were able to talk to. So 4.79 was the current interest rate. Renegotiated interest rate down to 2.59%, so 2.2% change. Now, if we talk about a loan of $462,000 roughly, it's over $10,000 in savings a year. That's $847 per month. That's $211 per week. Now, these were really, really lovely people, great landlords, had some really good tenants, and they were in the middle of negotiating what they could do to help, because obviously there's a ripple and a flow-on effect when a tenant may, unfortunately in the current circumstances, lose their job, and a landlord's in a position where they had these tenants for sort of 3 or 4 years and they wanted to do something there. So we've been able to bring all of this together to help both parties negotiate, just to find a little bit of a level playing ground. And so the appreciation we got from those clients in particular, and from the tenants, it's just such a big win for everyone involved. So lots of encouragement as a landlord, if you do own investment properties and you're sort of giving some thought to, maybe at the moment it's not an issue, but we don't know where this is going to be in the next 1, 3, 6 months going forward, is really reach out. Let's just have an open chat. Let's understand your position. Let's help maybe action some of those changes earlier rather than later, because when you go to do this, and if you do have tenants that can't make repayments or break lease or need to move out, that's also going to have a flow-on effect for your loan application. So really important as early as possible that we can help renegotiate or restructure or just get you in a position as a landlord to be taken care of, because unfortunately it appears in the current market, and depending which way the government goes, that fortunately the landlord's been seen sort of to have to carry the weight during this period. So if we can do anything possible to help lessen that load, we'd love to. So from us as always, really just wanting to reach out to you a little bit about the wins we've had for the week. It's obviously a quick catch up, super casual. Lots happening in our world, but lots of encouragement. If there's anything myself, Lauren, our whole team here can do to help, encourage you to get in touch, and we look forward to updating you all next week with what's happening in our world. So talk soon. Thanks.
Bye.